Chief Executive Officer of Dangote Refinery, Aliko Dangote, has revealed that the Nigerian National Petroleum Corporation Limited no longer owes a 20% stake in Dangote Refinery. Dangote disclosed this during a press briefing at the refinery on Sunday. The business mogul revealed that the Nigerian oil company now owes only 7.2% of the refinery due to its failure to pay the balance of their shares, which was due last month, June. He stated that while the NNPC had promised to provide the funds, it has been unable to meet its obligations, thus reducing its stake in the $19 billion refinery to 7.2%. For some perspective, we're joined by Senior Manager and Lead ESG and Climate Change Services at Anderson, Temitope Kolade. Temitope, thank you very much for joining us.
Yeah, thanks for having me. Good evening.
Good evening. As an industry expert, what were your initial reaction to this news? Did you anticipate it by any chance?
Well, I would say I didn't necessarily anticipate it, especially because most times when you have conversations with people at the NNPC, they would want to continually remind you that money is not necessarily the problem. But again, it doesn't come as a surprise because we've seen NNPC more or less going on the campaign to raise funds in the last couple of months, trying to get funds here and there, either via forward sales of their oil produced to ensure that they have more drilling campaigns and all of that. So it would appear that maybe the NNPC is also trying to see how much of cash it could mop up from some other places to deal with the issues that Nigeria has with respect to foreign exchange and even other issues as a corporate organization that it is itself.
What are the broader economic and strategic implications for the country generally, considering that the NNPC's stake has now significantly reduced in the refinery?
I would think that it changes very little for the country. To a very large extent, from the point of regulation, the government remains the regulator of every activity across the economy, including the midstream sector and of course the downstream where Dangote Refinery operates. So it continues to regulate that sector. One would have expected that with 20%, maybe because of that higher stake, maybe the government would also be more concerned about how the company is run and would see to its success by every means. But I would think that it doesn't really change much for the Nigerian government because, again, it's really not so much about the stake. I think it's even better for the company to run as a private entity in a way, because some thought leaders might say to you that we've not seen much happen with the Port Harcourt refineries, with the Warri refineries, Kaduna refineries, the government owned 100%. And so how much value do we really expect the government to put into the Dangote refinery? So maybe not so much has happened again at a time where there are views as to whether the government should even sell those assets that are not productive within that refining sector already.
Away from the NNPC stake for a bit, the Dangote himself highlighted challenges in sourcing crude oil for the refinery, noting that the company has been obtaining it from the US and Brazil. What does this mean for the refinery and for Nigeria?
Well, when we think about it, it doesn't say anything good about Nigeria because it really is counterintuitive that we'll have crude being produced in Nigeria exported to other countries. At the same time, we are importing same crude to then refine and sell the refined products, while we are still buying refined products into the country. So it's ordinarily seen as counterintuitive. But again, we look at the issues from a dispassionate point of view and would say how should people who have crude sell their crude oil? And because it's an international market, because it's a global commodity, the prices are determined at a global scale. Unfortunately, the CBN rules also would say that you don't price commodities within Nigeria in foreign currencies. So you've got to sell those in Naira. So that could serve as some sort of disadvantage to those who are operating within Nigeria who want to sell to a Dangote, for instance. So maybe that is not unconnected to the challenges that Dangote is having with sourcing crude locally. Pricing issues is fundamental to one of those issues, I would say. And so it doesn't say something very good about the economy. And again, if you tie it back to the fact that we're now seeing the government, or the NNPC, which is the investing arm of the government in oil and gas activities, not meeting its obligations in terms of the 20% shareholding in Dangote. It means that maybe the government will not also pay so much attention to the problems that Dangote may be facing, which is not also good for the country at large.
All right, Temitope, thank you very much for speaking with us. We appreciate your time.
Thanks for having me.